Buon pomeriggio a tutti alla conferenza Capital Group. Io sono Giampaolo Guidi, Managing Director di Capital Group. Oggi qui con me direttamente da Londra, nostro Investment Director per la parte Fixed Income, Alvaro Perogala. Grazie Alvaro di essere qui con noi. Oggi vi intratterremo un po' sul tema appunto del Fixed Income e per capire qual è la rotta, la direzione che possiamo dare agli investimenti, visto anche quello che sta accadendo in queste settimane sui mercati, cercare di capire se ci sono dei punti fermi su cui ancorare gli investimenti dei nostri clienti. Prima di iniziare la nostra intervista, Alvaro, vorrei spendere due parole su Capital Group, che immagino molti di voi conoscano, ma è una realtà che è entrata in Italia da una decina d'anni, quindi magari non tutti sanno quali sono effettivamente un po' i paradigmi che stiamo portando avanti e quelle che sono le caratteristiche dell'azienda. L'azienda è stata fondata, l'avete visto nel video, nel 1931, quindi una delle aziende più longeve al mondo nella gestione del risparmio. È un'azienda di asset management che è di proprietà di 500 soci, dipendenti e manager, quindi non siamo quotati, è un'azienda privata. Oggi gestiamo più di 2.800 miliardi di dollari, è una delle più grandi asset manager attivi al mondo e gran parte di questi attivi sono sulla parte equity e poi abbiamo circa 600 miliardi sulla parte fixed income. Quello che cerchiamo di fare appunto in Italia, e lo stiamo facendo sempre di più, è quello di entrare nei portafogli dei vostri clienti, quindi degli investitori italiani, portando tutto quello che sono le nostre capabilities, expertise, il know-how, non solo come proposizione commerciale di prodotto, ma anche con il nostro Capital Learning, che è una sorta di academy per quanto riguarda il passaggio generazionale, quanto riguarda le strutture che portiamo dagli Stati Uniti per come lavorano i team di consulenti finanziari. Oggi però ci concentriamo sulla parte obbligazionaria, è una parte che ovviamente ha un valore prioritario all'interno della composizione dei portafogli, soprattutto degli investitori italiani, ma penso anche degli investitori spagnoli. Avrete capito che Alvaro non è, risiede in UK, ma è spagnolo, e quello che ci interessa un po' capire, Alvaro, oggi è effettivamente se, alla luce di quello che sta anche accadendo in queste settimane sui mercati, avrete visto circa un'ora fa è uscito anche il dato dell'inflazione statunitense sotto le aspettative, quindi da un 3% si è passato a un 2,8%, i mercati sembra che siano impazziti di gioia, quindi capire se comunque ci sono dei punti fermi. Noi siamo un'azienda che lavora su orizzonti temporali lunghi, crediamo nella pianificazione finanziaria, quindi se ci sono dei punti fermi che abbiamo visto magari già nel finire dell'anno scorso che portiamo avanti anche quest'anno.
Ciao a tutti. Unfortunately, I don't speak Italian yet. Just give me one more year and then I'll improve, I'll get there. This question is very timely because we recently gathered all the fixed income professionals at Capital Group for a couple of days to exactly discuss this question, like how do we see the world playing out in the next 6 to 12 months? And the main conclusion here is that if you look back at the last 18 months, you have seen an economy that has been decelerating from 4% pre-COVID to 2.5%, but most importantly, you have seen dispersion between the US and the rest of the world. And this is exactly what you can see in that slide. So one side of the table, you have the US economy, very solid, growing at 3%, adding 160, 170K jobs on average in the past 6 months. And then on the other side, you had Europe and China, both economies which were barely growing for different reasons. In Europe because of political instability, and in China for the real estate bubble. But what is interesting in these last couple of weeks, we have seen more convergence. So this dispersion that took place is starting to converge, and this has few implications. But we have seen higher recessionary risk and how it has driven or pushed down equities and treasuries up, and actually the opposite in Europe, especially after Germany announced a very well-received package that actually surprised markets on both size and speed. So overall, if you put all these together, you have an economy that is decelerating probably this year, but still in positive territory, and with downside risk. And if you think about it, this is well news for investors or for fixed income investors, because in the base case scenario, high quality fixed income is going to provide you a total return that is going to be approximately the carry with some price appreciation. But if we go to the downside scenario, high quality fixed income can also protect your portfolio because your risky assets will tend to suffer here. And this is exactly what we have been seeing in the past couple of weeks. And actually, we argue that the entry point is very attractive currently because you can see here that we have right now very similar yields to those that we used to have in December 2022 when you saw central banks finalizing their hiking policies, but with inflation that are half the levels it used to have or we used to see in December 2022, which means you can generate very healthy total returns in real terms, so after adjusting for inflation, between 1.5 and 5%, which means that with fixed income, with a sector that has a relatively moderate volatility, you can lock in these yields for longer. And that's why one of our points is that with these yields or these valuations across the fixed income spectrum, there is absolutely no need to concentrate portfolios into one specific sector. I guess here in Italy it's very popular to invest in BTPs. So with a portfolio that can have the flexibility to invest across the different sectors within credit, you can have same returns, even potentially a pickup, but with lower volatilities.
Perfetto. È interessante il fatto appunto che oggi abbiamo un punto di partenza che fino a qualche anno fa non avevamo, inflazione via via in diminuzione, i tassi sono ancora elevati, quindi i tassi reali sono ancora eccellenti. Una perplessità che abbiamo, diciamo un problema o comunque una preoccupazione che abbiamo sul mercato italiano, ma penso anche su quello insomma in gran parte europeo, è il fatto che c'è ancora tantissimo cash in portafoglio, cash is king si dice. E non è sempre facile convincere la clientela del perché uscire, perché aspettare, soprattutto in momenti di incertezza come questo, dove chi ha liquidità in portafoglio, insomma, dice ecco, ho fatto bene a tenere una gran parte liquida. E che cosa possiamo dire ai clienti? Che poi è quello che facciamo quando dicevo che forniamo non solo proposizione commerciale, ma anche uno storytelling che poi può essere portato al cliente finale.
Yeah, absolutely. Cash definitely has been king, and in particular tends to outperform other assets when you see central banks hiking rates. Why is that? It's because you are completely insulated from rates going up. But this period is already over. We have seen already policy rates peaked already, and not only that, central banks from all over the world are already normalizing monetary policy, and this has two potential or many implications. So the first one is the reinvestment risk, meaning all these interests that you are seeing that money market funds deposit are paying you right now, which is around like 2.5% probably in euros, is already eroding, and it's gonna erode more with time. So it's very important to bear in mind that even though it may seem attractive right now to have like this interest is going to diminish throughout time. And especially in Europe, because we believe that potentially ECB, in this case, will have to cut rates a couple of times this year in 2025. And then the second point is that not only that your cash is going to erode with time, but if you increase a bit of duration in your portfolio, you're going to generate a total return that is going to be a combination of both initial yield plus some price appreciation via duration. And this is exactly what you can see in that slide here. Here, we have put one example, the Fed, on average, 5 easing cycles, having some high-quality credit in your portfolio, has consistently outperformed cash in the next 3 years. And by 17% excess returns, which is a 5% annualized each of the subsequent 3 years. So that's the first point. And I think we have seen this example, particularly in the last couple of weeks, that in periods of volatility, what is really going to protect your portfolio is exactly this, having some duration. And then the second point that is very important to bear in mind, because sometimes when I talk to investors, they tell me, oh, Alvaro, I think the Fed is pricing too many cuts, so I don't want to invest in fixed income. I prefer to be tactical. And I think this is a very good reminder of if you focus too much on market pricing, you can get lost, because the market tends to be wrong most of the times, as you can see here. So I think the learning lesson here is not to focus too much on the noise of what the market is going to price, but on the direction of the policy rate. And I think central banks from all over the world have been very clear that the direction is towards normalizing monetary policy. And in the past, actually, 8 months, I think is a great example. If you remember, in summer last year, market was pricing 150 basis points cuts for this year. Then in January, 0 cuts, and now it's pricing 3 cuts. So if you wait to enter in the perfect moment, you can get lost. So that's why I think it's an important reminder to, if you believe rates in the next 6 to 12 months are going to be lower, then it's a really good time to increase duration, because your total return is going to be a combination of income and price appreciation via duration.
E poi volevo dire una cosa a tutti, le slide poi le troverete caricate, quindi no, prevedo che insomma sono decisamente interessanti, state facendo le foto, ma poi per avere una visione più chiara le trovate poi caricate sul portale. E un'altra cosa interessante che appunto dicevi, abbiamo visto insomma i rendimenti del credito sono decisamente, insomma, creano appetito, però una certa preoccupazione la si ha un po' tutti per gli spread. Sono molto compressi, non sono mai stati così compressi negli ultimi 20 anni. Quindi un po' la preoccupazione è quella che possano allargarsi ulteriormente e non si capisce perché invece dovrebbero rimanere così schiacciati. A proposito di questo, cosa possiamo dire anche ai clienti, ma qual è la nostra view sugli spread attuali?
Yeah, that's the multi-trillion-dollar question, I would say. What's going to happen with spreads? And actually, in the last couple of weeks, we have seen spreads widening a bit. But if you compare it to historical standards, they still remain relatively tight. But I think there are like different caveats to bear in mind. So the first one is spreads are tight. Yes, we acknowledge that, but there is dispersion in terms of geographies and sectors. If you look at the US right now, pharma, they are trading at the most attractive valuations that we have seen in the last 30 years. And then on the other side, energy, they are trading at the tightest valuation that we have seen in the past 30 years, which means on the average or aggregate level, yes, the spreads are tight, but this doesn't mean that there are not opportunities. And that actually is very good news for Capital Group, because we are a fundamental investor, meaning the majority of the excess returns that we generate in our portfolios is going to come from security selection. Second point that is also very important is the reason why spreads are tight. And there are 2 reasons. So here, fundamentals are very strong, combined with very strong technicals. And here you have the proof. So in the past 25 years, leverage ratios of companies, in IG especially, but they have been the lowest in the past 25 years, which means you are getting paid less, yes, because you are taking relatively less risk. And we are heading into a relatively positive macro environment. And then the third point is that don't miss the forest for the trees, we say here in the UK, meaning spreads are tight, yes, but what is going to drive your total return are not the spreads, is the overall all-in yield. And these are trading at the most attractive level that we have seen in the past 15 years. And this has 2 potential implications. So the first one, you can see that slide. But you have so much buffer for spreads to widen before you can incur into a loss in the next 12 months, 80 bips. And this is completely ignoring rates, because in such a scenario, probably rates are going to go lower, and it's going to protect your total return. But ignoring rates, you have still 80 bips buffer. And then the important point as well, that this is a completely different scenario to 2020 or 2021, where you can see that the buffer was only 20 basis points. So the first one is that you have buffer, and this is important. And then the second point is that the metric that is more important for long-term investors are not spreads, are again all-in yields. And here you have the proof. So there is a very high correlation. You can see these two lines are very close to each other, meaning that at every single point in the past, I don't know how many years, but 20, 30, 50 years, you can see that the yield is a very good proxy for the 5 years annualized total returns. Meaning that if today you invest in IG credits, you can lock in these returns for the next 5 years, which is a 30% cumulative return. So that's why we think the entry point is so attractive, because you can lock in these returns for longer.
Allora, lo anticipavo prima, insomma, nelle ultime settimane abbiamo visto tutti i forti ribassi sulla parte azionaria, quindi molta volatilità, e poi ci sono state delle obbligazioni, soprattutto anche sul mercato US, di buona qualità, che hanno offerto una sorta di copertura, quindi hanno agito un po' a mo' di airbag, quello che si viveva sempre prima, insomma la creazione di un portafoglio dove la parte obbligazionaria avesse quel tipo di ruolo, quindi avesse un andamento differente rispetto alla parte azionaria. È qualcosa di episodico, secondo te, secondo insomma, la nostra view, oppure un qualche cosa che potrebbe protrarsi lungo il 2025 per gli anni a venire?
Yeah, this is a really good question. I think in the past couple of weeks, we have seen back the benefits of fixed income. Meaning, if you think about it, the three main characteristics why people tend to find or buy fixed income usually are to generate good income, to preserve capital over the long term, and then to diversify from equities. And this in particular, we saw in 2022 that diversification wasn't your friend. Why? Periods with very high inflation, as you can see here at the back, tend to correlate both equities and bonds, and actually to the wrong side. That's why we saw very sharp drawdowns in 2022. Why? Inflation tends to be bad for fixed income because coupons tend to be fixed, and then when you have high inflation, investors tend to require a higher nominal yield in order to compensate for this in real purchasing terms. And then for equities as well, like high inflationary periods tends to be bad for equities because yields are higher, and then you have to discount cash flows with high rates, which is very intuitive. The good thing is that we are heading into a period where inflation probably is going to end up by this year at 2.5%. And why is that? You have already 60% of the CPI basket that is already increasing at 2% or below. And the remaining, the bulk, it's mostly rent, which is also decelerating. So that's why, if we don't see any surprise on tariffs, we're pretty confident that you are going to see an inflation rate that is going to be around 2.5. And this is great news for fixed income investors. Why? You have it here. But we are approaching the green area, which means that this traditional negative correlation between equities and fixed income is back. And actually, as Gianpaolo mentioned, we have seen that in the past 2 weeks, particularly in the US, with higher recessionary risk. We saw how equities were under pressure, and then high-quality credit treasuries up. And then in Europe as well, when you saw Germany announcing this super aggressive, well-received fiscal package, you saw equities down, and then fixed income down. Which again, this is great news. Why? Because if you combine a very diversified portfolio with sectors that are negative correlated, you can arrive to the same destination point, but with less volatility.
Un'ottima proposizione questa, ovviamente, per creare poi un portafoglio equilibrato utilizzando la parte fixed income. E, riassumendo un po' quello che dicevi, insomma, la view continua ad essere positiva, moderatamente positiva per i prossimi mesi, pur vedendo una decelerazione, comunque rimaniamo in territorio positivo. E prima mostravi anche quelli che sono prospetticamente i rendimenti a scadenza delle varie asset class obbligazionarie. Per quanto riguarda quelle che definiamo più rischiose o spicy nell'asset obbligazionario, che cosa intravediamo come possibili opportunità da prendere oggi, da inserire all'interno del portafoglio del cliente?
Yeah, so in particular in high yield, I think this is a good reminder again, and I'm insisting on this point because it's important. High yield has been a good reminder to always stay invested and to have a diversified portfolio. And why is that? If you look back after 2022, when we saw this massive increase in rates, everyone was expecting a recession, which it hadn't happened so far. And the best performing sector during these 3 years consecutively, it has been high yield, which means if you were completely void high yield, you have been lagging as a fixed income investor. So I think the first point to always be reminded is adjust your portfolio according to your view, yes, but don't take extreme positions. And actually, in high yield, it's interesting because looking forwards, it is true that spreads are tight. Actually, we have seen a widening in the past couple of weeks, but if you compare it to the last 20 years, you'll see that they are trading at tight levels. However, both fundamentals and technicals are very strong. If you compare the composition of the high yield index in the 90s, you saw that only 10% were double Bs, so the highest segment within the high yield. Now, if you take a look here at the back, at the left-hand side, you'll see that 51% of the companies within the high yield index are double Bs, so the highest quality. And this is in a combination of very strong technicals, as only 5% of the index is expected to mature in 2025. So that's why it's very likely, or we believe, that potentially you're going to see a period for longer with spreads at these levels. So a similar scenario to what we saw in the early 90s or 2000s, where spreads were trading at these levels. So that's why in our multi-sector portfolio, for instance, we are underweight high yield because we acknowledge valuations are tight, but we also acknowledge that they can trade at these levels for longer. And you want to generate this excess carry of 300 basis points over treasuries.
Sicuramente un segmento dell'asset obbligazionaria che diventa molto molto interessante. Un altro è quello delle cartolarizzazioni, perché ovviamente insomma poi cercando dove c'è più rendimento magari troviamo un rating elevato, un rating creditizio elevato con dei ritorni prospettici interessanti. Noi lavoriamo sulle cartolarizzazioni, come ci lavoriamo? Come le inseriamo in portafoglio? Abbiamo concentrazione? In quale quantità li stiamo inserendo?
Yeah, so this is a sector that is getting very popular. If you take a look at many other competitors, you'll see very concentrated portfolios into these kind of securities. And the main reason why is because valuations are more attractive relative to other sectors of the fixed income market. So this is why this is a sector that we also like, and we have modest exposure. Why is that? We want to follow a different approach, because there is no free lunch here. So these securities are trading at more attractive valuations because they tend to be more illiquid, in particular in periods of stress. When liquidity dries up, you can end up holding these bonds and not be able to sell them. And the main reason why many managers, they tend to concentrate portfolios into these securities, it's because they really became specialists, especially after the crisis of 2007, where we had rates actually negative in Europe and zero in the US, but ultra low rates. So the only way to generate very attractive income was to over-concentrate portfolios into securitized. However, now, in a potentially a higher rate environment for longer, we believe there is absolutely no need to concentrate portfolios in such illiquid securities. And that's why if you take a look at our multi-sector portfolio, you'll see that we have a moderate exposure. This is a sector that we like, but we want to emphasize, we want to keep the portfolio very liquid.
Perfetto. Quindi noi concentrazioni, insomma, andiamo sempre a premiare poi quella che è la diversificazione, che può essere più premiante. Quindi parlando di diversificazione, un po' domanda da sfera di cristallo, però insomma tutti ci si chiede questo Trump 2.0, i dazi come andranno ad incidere, come andranno a impattare, insomma ogni giorno il mercato esprime giudizi a seconda di quello che è l'andamento anche dei mercati finanziari e quelle che sono le proposte sui dazi. E ovviamente avranno un impatto che potrà essere più o meno deciso sui mercati emergenti, ad esempio, soprattutto su quelli più vulnerabili. Anche in questo caso che cosa stiamo facendo? Perché immagino, insomma, monitoriamo costantemente la situazione, quali individuiamo magari come mercati più vulnerabili e quali invece dove affidare i risparmi dei nostri clienti.
Yeah, in EM we are getting news by the day, so it's really difficult to keep up. For emerging markets like our view right now is that it's difficult to take a very strong directional position, given that we don't know, there is so much uncertainty around like how, when, in which capacity tariffs are going to be implemented, which countries are going to be more impacted, etc. So we prefer to be overall neutral here. This doesn't mean that we are not finding good opportunities. It just means that we prefer to take relative value positions versus just having strong directional views. Having said that, in emerging markets, it's important to differentiate local versus hard currency. In particular, for hard currency, the countries that we tend to like are those that have very fundamentals, and in particular, some countries where you can capture some issue premia, you know? And then the countries that we like right now, in particular for hard currency, are either in North America or Eastern Europe. And then on the other side, in local, and this is where we have a bit more exposure, we tend to go for countries where you can find like real rates differentials in favor versus the dollar, with inflation rates relatively close to targets, and with central banks that have demonstrated already that they can act independently of what the Fed does, because the Fed is well expected that they're going to keep rates higher for longer. So we want to go for countries that have the discipline to lower rates regardless of what the Fed does here. And in particular, the countries that we tend to like are in South America. But I think like from a macro perspective that the outlook can be a bit mixed, it's important to bear in mind that valuations here are very attractive. And if history serves as a good proxy of which kind of returns you can generate, you can see here that when we had all-in yields at these levels, the 2 subsequent years, investors were able to generate a total return between high single digits to low single digits.
Ottimo, è chiaro che insomma poi il distinguo fra proposizione e applicazione insomma del cambio nel senso in valuta locale, in valuta forte, poi crea anche un'esposizione differente a seconda di quello che andiamo a ricercare. E parlando di valute, insomma la domanda che viene sempre fatta a cui non abbiamo mai una risposta è come vediamo il cambio euro-dollaro, più che altro perché sai, insomma siamo tutti investitori euro, diciamo che la gran parte, ma la totalità dei portafogli sono espressione dell'euro, e quando ci affacciamo magari a strategie che hanno come valuta base il dollaro, poi dobbiamo capire effettivamente se prendere sulle spalle quello che può essere diciamo una variabile esogena e quindi il cambio euro-dollaro, o coprirci sopportando quello che sono i costi di hedging, che ovviamente poi dipende da quello che è il differenziale dei tassi, delle curve, anche quali sono le prospettive che vediamo insomma affacciarsi sul mercato americano piuttosto che su quello europeo. E allora ti chiedo, so che insomma dare una risposta secca non è semplice, quella che è appunto la nostra visione del cambio euro-dollaro, e cioè come Capital Group e anche come Alvaro, quale può essere un consiglio nel momento che ci affacciamo a un comparto che ha valuta dollaro, se acquistarlo per il nostro cliente in dollari o acquistarlo a cambio coperto sopportando appunto il costo dell'hedging.
Yeah, I love it because Gianpaolo is asking me all the difficult questions. So this is a question that has generated a lot of debate within the portfolio management team. You have some who are bullish on dollar and some others that are bullish on euro. And both of them, they have very good arguments. So the ones who argue for a stronger euro, they basically name that all this fiscal package that is coming from Germany is going to boost growth in Europe, and then we are going to have higher yields overall, which is going to push the euro even stronger. And then on the other side, you have the USD advocates, and they are basically arguing for a stronger US economy, which is going to attract capital flows and overall like more demand for the dollar. And then also very important, a interest rate differential, which is going to become larger, because the ECB in this particular case, we do believe, is going to cut rates more than the Fed. So overall here, our advice would be, it's a good opportunity to have a 50-50 portfolio, to not take any very strong directional view and to benefit from either case.
Ok, quindi una cosa democratica, diciamo, 50-50, yeah. Ok. Va bene, non è mai facile esporsi sull'euro-dollaro, ovviamente. Allora, direi che siamo arrivati quasi alla conclusione, poi magari prendiamo qualche domanda da voi, se ne avete. Dato che, insomma, negli anni, visto un po' di anni che faccio questo lavoro, mi hanno insegnato che se non lasci almeno 3 idee chiave, poi si dicono tante cose, ma magari non si porta fuori nulla dall'aula. Quindi ti chiedo di riassumere tutto quello che abbiamo detto in 3 punti, in modo che, insomma, i nostri consulenti, e qui Alvaro ha i migliori consulenti che puoi trovare in Italia, possano portare ai loro clienti 3 spunti per diciamo, investire immediatamente domani nell'obbligazionario.
Yes, so 3 key points. So the first one is the macro outlook, as we discussed, is going to be very favorable for high-quality credits, meaning that if we see global growth decelerating but still in positive territory, with downside or risk to the downside, you can generate a relatively attractive return in the base case scenario that is going to be a combination of the initial yield plus some price appreciation via duration, but you can also generate attractive returns if we do have a recession. Not our base case, but if it happens, you are going to be well protected. Second one is that you have really attractive valuations across the risk spectrum here, across the fixed income. So there is absolutely no need to over-concentrate portfolios into, for instance, BTPs. Why? You can generate a better portfolio with even a yield pickup with lower volatility. And then the third point, which is very important, is the cash is getting very expensive. ECB in this case is very well expected. They're going to cut a couple of times this year, which means the interest that you are seeing deposits or clients are seeing in deposits right now is going to diminish. So it's a great opportunity to lock in these yields for longer.
Perfetto. Almeno, insomma, 3 punti chiave da portare poi ai clienti. Ultimissima domanda, insomma, per intercettare tutto quello che rappresenta un po' la nostra view, quale può essere una strategia che appunto, insomma, parla di tutto quello che poi è la nostra view sull'obbligazionario e quindi come intercettare al meglio quelli che sono anche i vari segmenti dell'asset obbligazionario.
Yeah, so for this one, we have a very strong strategy. This is called multi-sector income. So it's a flexible strategy that invests across the credit universe with the flexibility to adapt to different macro environments. The key difference here is that we, by a structure, we don't concentrate portfolios into one specific asset class, because despite having flexibility, we have max and minimum exposures for each of the 4 credit sectors, so high yield, IG, EM, and securitized. And right now we think it's a really good opportunity because you have a 5% yield in euros with around like 4.5 years of overall duration that can perform nicely if the base case goes through or if we see a more challenging environment, it has the flexibility to increase high quality duration and protect your portfolios.
Grazie, grazie Alvaro. Abbiamo gli ultimi minuti, se c'è qualche domanda dal pubblico, qualche curiosità, dubbio, qualcosa che insomma, vi hanno chiesto i vostri clienti oggi, ieri, in questi anni, direi che insomma, Alvaro, grazie alla sua esperienza e al suo insomma, lavorare continuamente con i nostri gestori, vi può dare la risposta di Capital Group. Vediamo se c'è qualche domanda. Non fate i timidi, se no poi... Chiaramente poi vi aspettiamo al nostro desk anche per darvi quello che è l'outlook, perché insomma lo abbiamo anche al desk, quindi lo trovate stampato. Nessuna domanda? Va bene. Allora Alvaro, ti ringrazio. No, forse c'è una domanda, fuori dalla timidezza.
In italiano?
Sì.
Visto che la parte del credit sembra molto interessante da percorrere, prioritaria quasi, mi domando rispetto al private credit, che è un settore tra l'altro generalmente decorrelato rispetto al resto, come vedrebbe nel caso un investimento anche su questa parte, oltre alla yield, tutto quello che abbiamo detto finora.
Yeah, so private credit is getting a lot of attention here. From a diversified portfolio perspective, I would say, like, if you can invest some in private credit, I would personally go for it. I think one of the issues here is that you have to be willing to commit your capital for longer. The good thing about high yield right now is that you have more liquidity, and also you have, and we saw that in the earlier slide, you have the opportunity to lock in this yield, 7.5% overall, with very high quality companies within a high yield context. And I'm saying that because private credit tends to go for middle market companies that tend to be more risky, but because they don't trade liquidly every day, you don't see the risk. But the underlying risk is there, okay? So I completely understand why clients want private credit, and I think it's a good asset class, but the volatility that you see is not the real one, because you don't see the NAV daily, because it's not published. Usually they publish like every quarter. So yeah, I would say like be careful. Obviously, we don't have any private credit strategy here, but I think there is a very nice story for high yield because it trades daily. It pays you around like 1 or 2 points above the long-term historic average, and the overall sector is very high quality.
Qualche altra domanda? Sì, qui c'è.
Which is your expected duration in your model portfolio?
Yeah, so for multi-sector income, for instance, this is our flagship multi-sector strategy. Right now has between 4 and 5 years of duration. And why is that? Because we want to provide this income, through the credit component in case our base case goes through. But if we see a period, a longer period, like the past 2 weeks, where you see a lot of volatility, we want to have this balance with some hard duration to, again, generate attractive returns, even in the second most likeliest scenario.
Non mi sembra di aver sentito nella vostra strategia parlare di debito emergente, se per caso nei portafogli è prevista qualche quota o qualche possibilità. Grazie.
In realtà ne avevamo parlato.
Yeah, so when we mentioned before emerging markets was emerging market debt. And just as in a nutshell, you know, where we see the best opportunities right now in EM, it's in local currency, and in particular, in those countries in South America where you see real rates differential in favor over the US. So I'm talking about like Brazil, South America. And then on the other side, on hard currency credits, or in EM, particular countries in North Africa, such as Egypt, they have a very nice fundamental credit story because you have countries with very good fundamentals and you can still capture some of the spread versus treasuries. Because if you take a look at the past 2 years, this spread for most of the countries in EM has compressed like quite a lot. This doesn't mean that we're not finding opportunities. This just means you have to be a bit more selective. And in particular for EM hard currency, North America for us is a sweet spot.
Va bene, allora vi ringraziamo, grazie dell'attenzione e ci vediamo al desk. Grazie mille a tutti. Grazie Alvaro.